All right, ladies and gentlemen, hello and welcome back once again to the longest running show in the world about data. It's called DM Radio. Yours truly, Eric Kavanagh, here today. And obviously, we've been talking a lot about AI these days, machine learning. But what do you need to do quality AI? Well, obviously, you need data. And I love the use case we're going to talk about today, the use cases, because we have a very special guest. Tapan Parekh is with a company called Convera, and they move money. And when you move money, you have to be deterministic. You need to know for sure where the money went. Did it get there appropriately? And obviously, these days, it's all about speed and efficiency. And if you're moving money from one country to another, well, you have regulations to deal with, you have currency exchange rates to deal with. There are all kinds of factors that come into play. And let's face it, folks, we have seen tremendous innovation in the fintech space over the last, gosh, like 5 to 7 years. It's really wonderful to watch as banks and other financial institutions embrace these new technologies and find ways to move our money faster, more seamlessly, for less cost. The cost that cost component is very important. I worked at a bank. My first job when I was still in high school, I was a teller at Midwest Savings and Loan. And the year, I'm afraid to admit, was what, 1985 or something? It's like a long, long time ago. I still remember on the keyboard, black 5, red T, now account, enter the account number, enter the amount. I remember doing all that stuff. Back then, a check would take up to 2 weeks to clear. So if you deposited someone else's personal check, we'd put a hold on it for 7 days to wait for that money to clear because it was an old system. And back then, that system was cutting edge. I mean, they would log into a system that all these different banks would use because, again, it's money, it's deterministic. We cannot make mistakes. We can't lose money. We have to know where it went, who got it. All these fun facts are just really, really important. There are all kinds of regulations to worry about. So companies in the fintech space, they are buttoned down. They have their act in gear. They have their act in order. They know what they're doing, and that's what we're going to talk about today. So with that, Tapan Parekh of Convera, welcome to DM Radio. Tell us a bit about yourself and Convera and what you folks are working on.
Thank you, Eric, for allowing me to come on your show and making me part of this legacy.
Yeah.
Um, so my name is Tapan Parekh. I am currently the director of data and analytics at a company called Convera. We, as you know, were initially part of this public company known as Western Union, which is famous for cross-border payments. And about 3 years ago, we got spun out of it and are now handling entirely end-to-end commercial payments on our own. We have more than 26,000 customers. We trade across 140 plus currencies, across 200 plus countries and territories,
Wow.
right? We have more than 30 locations worldwide, and we serve customers ranging from education to law firms to international finances to trade and services firms to banking, everybody. We are a global commercial B2B cross-border payments company. And we pride ourselves in being a fintech company first, right? And that means that when you talk about finance and when you talk about technology, it's a great combination where you can do a lot of innovation. You can enable a lot of simplicity and access to funds, which is what drives the whole world economy. Um, in terms of our business, we are sort of like, broken down across different verticals of how we serve our customers. One of them is our trades and services business or vertical. We have financials business or financial institutions business. Then we have a self-managed parts of our business. Then we serve education, which has been how we essentially started off with. And then we have a few other small segments which we are also trying to expand into. Before we dive into anything, I think it's sort of like important for all of your viewers to sort of understand how money actually moves, right? And so typically what happens is when you transfer the money, it can either be in the same currency or what we call same currency. So that's mainly considered domestic currency. Somebody sending money from one place in, say, New York to somebody in San Francisco, right? It's the same USD to USD conversion. But when you transfer the money across borders or across countries, That's where you need to go through a foreign exchange provider, or where you need to convert the currencies, right? And there are laws and regulations and exchanges that you can use to enable that. Now, typically, what happens is individuals like us, we don't necessarily have ready access to these exchanges to send our funds directly, right? We don't understand the nuances and so on. So that's where companies like Convera would step in and help any businesses, be it small or large scale enterprises, to move the funds across, right? I mean, and there are lots of other companies in the play, like you might have heard of, Visa, PayPal, Remitly, Wise. Like these are all, even Western Union, right? Like they do C2C, right? We are in the business of B2B payments, right? And that makes it even more complex if you think C2C is complex. So typically, what happens is you can send the funds directly. You being a customer of one of these companies would send your funds to that company's account. That company might have a relationship or might have an account with another country, and within that, their banks in those
Hmm.
countries, right? So typically, the funds move between one bank in one country A to another bank account in country B, right? And so it could be the same banks, or it could be a different bank. So typically, any company who needs to hold money, they need to have a banking license. Convera chose not to have a banking license on our own. And so we want to be the facilitator, the enabler of that, right? With banking comes a lot of regulations and restrictions, which we wanted to not get into, right? And then have the flexibility and freedom to innovate. And so
Hmm.
typically what happens is companies would have their accounts in their own uh, local local banks, or one of the large banks like Chase or Bank of America or Citibank and HSBC and so on, right? So typically what happens is they would send the funds over to one of our bank accounts, and then we would either route it in a direct fashion or an indirect fashion to third-party correspondent.
Hmm.
So if they want to send to a more frequently used currencies, like say you want to send it to Japanese yen, or Chinese yuan, or Singapore dollar, it's much more easier, right? Between USD to that, or between London pounds or sterling to Singapore or to Australian dollars, right? We typically have a lot of direct bank relationship, or we have our own accounts. Typically, these accounts are called nostro accounts. So we would transfer the funds over to there, or sometimes when we have to send money to some countries or which are not highly traded, it's sort of hard for us to even maintain or retain such the funds in those currencies. So we would use
Yeah.
indirect bank accounts. Or if the recipient bank is a much smaller bank, even in that scenario, we would have to use a middleman or third party correspondence. So
Yeah, so real quick, what one of the things that you were saying there is that a lot of times the ideal scenario is that you will send it from your bank in one country to your bank account in another country, and then from that bank account to the other bank account of the client or the
yeah,
transactional partner, right? So that you're basically ensuring this is kind of clever because you're ensuring that the money lands in that environment, is now in that country in your account. And then from there, it's like, okay, we got the money here. Now we will give it to this third party that is actually moving the money from one place to another, right?
that is correct. Yeah.
Yeah,
So we have our accounts with our banking partners, and through the payment network, the money goes to the bank accounts in the corresponding country currency, and then from there it goes to either the beneficiary or the remitter's bank account.
I see. Yep, yep. And that's a lot to keep track of, right? I mean, so this is the point of having essentially a reference architecture, right, of where the money is going. So it's you've got an accounting practice that says, okay, because I'm all very familiar with what do they call it, two-phase commit, where it's like, okay, I sent money
Yes.
from me to you, and then you have to come back and say, okay, I got the money. That's the second phase of
Yeah,
the commit. So it's like, okay, now I know that transaction has taken place. Move on to the next transaction, right?
that is correct.
Yeah. Yeah, that's
Uh,
pretty cool. Go ahead.
Yeah, and so that is typically the case, right? And again, like what you mentioned about the two-phase commit, like that's much more of a database level concept. Here,
Hmm.
I was just trying to highlight or elicit uh, just on a high level how funds are being moved across, and what are some of the nuances that we have to keep in mind as the funds are transferred.
Yeah.
If you typically know, right, whenever you do a transaction, the funds typically never move. It's the accounting that takes place, right?
Mm.
There are very few circumstances where we would actually have to purchase foreign exchanges, even ourselves, um, to ensure that the funds are available in those corresponding currencies, right? And so for us, one of the things that we excel at is what is known as our treasury management, right?
What is it
Because
called?
we have treasury management,
Treasury
the
management.
treasury.
Okay.
Yeah.
Gotcha.
So
Treasury
we
management.
because we have bank accounts across so many of these different countries, and there are, as I mentioned, like these are called like the nostro accounts. We maintain funds across all of these different in all of these different bank accounts, right? So if a payer like wants to send the money, like in this case, a company, right? Uh, they would send us the money in US dollars. We would deduct it. So we would credit it in the USD in our one of our accounts, and then we would debit it out to the corresponding uh, country's bank from the corresponding country's bank account, right? And
Hmm.
so similarly, if there is a customer in that country who wants to send the payments across to say the same country A here, we would do the same, right? Credit it here and debit it here, right? And so
Hmm.
essentially, at the end of the day, the books are balanced out, and the funds actually have to be transferred over through the Swift network, right?
Hmm.
And so in these scenarios, between the two bank accounts, every night, like based on all of these transactions, the funds get moved over. Most of the funds get moved over through the Swift. There are a couple of other which do not, like in certain circumstances, do not go through Swift, but for the most part, they go through the Swift network,
Hmm. Yeah, that's
right?
that makes a lot of sense. And then you're balancing out every day. So you're closing the books every 24 hours. Is that kind of how it works?
Yes, at the end of the day, we do have to balance it out across all of our different bank accounts.
And I'm sure one of the sort of nuances has to do with foreign exchange rates and when transactions actually go through, because what you're doing is I'm going to throw a very crazy curveball at you. Okay, so I've been trying to explain to people quantum and quantum mechanics and this whole concept of superposition and how it's like, oh, until you look at it, it's moving and then it's static when you look at it, and people are like, what on earth are you talking about? But I think there is a very interesting analogy here, which is that, foreign exchange rates are changing constantly throughout the day, constantly. Well, when you execute a transaction, there is a moment in time when it becomes static, and it's like, okay, at this transaction point, the rate is this, the value is that, and boom, and then the
Mm.
money goes through, and that's kind of what we're talking about, where once you look at it, that's kind of the metaphor I'm making here, is that's the moment in time that everything stops, it becomes static, there's a transaction, and the ledgers change down on this side and up on that side. Does that make any sense?
Yes. So typically what happens is in like if you have ever purchased an insurance, right? They give you a quote and
Hmm.
the quote is valid for an X amount of time. Post that, the quote is invalid and you get new charges, right?
Right.
Similarly, like that, right? When we initiate a foreign exchange payment, uh, we issue a quote based on what is the current prime rate, and then there are certain fees that we add, so which we are very transparent about, and we pride
Hmm.
ourselves to be as close to the exchange rate, the global exchange rate that's available. Uh, there might be some banking charges, so which we have to pass on
Hmm.
or we have to pass through to the banks, and so we might have to charge that. But typically, we pride ourselves to help our customers reduce their cost and provide the cheapest exchange rate that is critical for the success of their business, right? Apart
Right.
from that, because they are because some of these companies, like say they are paying their suppliers in Asia, right? And so they want, they might have 60-day cycle, for the buyers to pay them out, but they need to
Hmm.
pay their suppliers out right away, right? And so
Mm-hmm.
that provides a big strain on the cash flow. So we provide credit service, or we provide the credit as well. And so
Mm-hmm.
credit management is another big pillar that we maintain and manage really well. And then at the same time, we want to reduce the complexity, right? We want to be reliable and always on time payment. Like if we say the payment will be available in 3 days, it has to be available in 3 days, right?
Right.
So we got to figure out the best route, the best way to route the payment so that it is available in the recipient's bank account on the stated day of when we said it's going to be available, right?
Yeah.
So there are
Well,
all of
yeah, go
these
ahead.
things that we maintain and manage that is sort of like hidden in the background from our customers.
Yeah, that's absolutely fascinating. And I've seen now you can kind of, as a consumer, you can see a window into this world, which is really the back end essentially. And the window you can see, and we're seeing it all over the place in the States now, are all these companies offering money, offering lines of credit, offering all sorts of financial services because these are difficult and tumultuous times. I mean, everybody knows that AI and its infusion across the landscape is causing all sorts of disruption. Some of it is very positive for certain use cases, and some of it is very disruptive in not so positive ways, let's say. But I see now all these different institutions are offering a real-time transfer for an additional fee, for example. And that's
Hmm.
because on the back end, they have something like what you folks are offering, which I think you kind of nailed it when you referred to it as a sort of holistic global treasury solution. So you're managing money that is sitting in all these locations. That's why it's accessible very quickly to your clients and to the people they're trying to send money to, because you do have this global network and you have, what I'm guessing is a sort of reference architecture that manages the accounting in all these environments because that to do that sort of thing manually would be basically impossible, so you have to set up rules and automations and systems that withstand scrutiny, that withstand auditability, where the regulators can come in and start kicking things and asking hard questions, and you can answer very quickly, yes, this is how we deal with that, this is how we deal with this. That's the key. And that takes a lot of time and effort to build out such a robust infrastructure. But at the end of the day, it allows you to open a spigot here and open a spigot all the way across the world, and money comes out the other side in almost no time. Well, folks, segment one is wrapping up here. This is already blowing my mind. We'll be right back. You're listening to DM Radio. All right, folks, back here on DM Radio, talking with Tapan Parekh. He is with a company called Convera. Tapan is a real engineering genius and a data professional. He's been in this business for a while, working on these things. And, Tapan, I'm sure people listening are wondering to themselves, okay, this is a financial services company, a fintech operation. You kind of referenced some fees that you make money on, but as I understand it, you have a very creative portfolio of different ways that you make money, which of course enables you to provide liquidity to people all around the world. And I'm sure there's some forecasting involved in there somewhere to kind of understand client behavior and know how much you'll need here, how much you'll need there. That kind of thing is probably important under the covers to minimize your costs and thus to be able to lower the fees. But tell us a bit about the more creative ways that you folks can make money.
Thank you, Eric. So there are different ways in which we truly make revenue, right? And it's not just like people assume that, hey, it's a payments company, we charge fees, and for every single transaction. Yes, that is one way in which we typically do make money, right? So I'll break it down into this segment, right? Like, so essentially, we divide our customers into two main categories, right? Either they are making high value payments or they are making high volume payments,
Mm-hmm.
right? So the way in which we charge them and the way we categorize our revenue streams from each of them is sort of like different. That obviously with each of these categories, they come with their own set of like risk profile as well. But keeping that aside for the time being, on a high level, we charge a small percentage of fee, depending on whether it's and it could vary from say 0.5% to 1.5%, depending on whether it's a high volume or a high value payment. And then,
Mm-hmm.
if it's a high value, then, depending on the tiers, the fees will go down, right? And you get
Mm-hmm.
much closer to the spot rate, right? So that's one way. Second way is there is a leverage that we have. So typically, whatever is the spot rate at a given point in time, whenever we issue a quote, that quote is valid for X amount of time. And if they initiate an order within that amount of time, then we abide by that quote. Even if there is a fluctuation in the spot rate, we will abide by
Right.
that, right?
Right.
And so we have a small arbitrage on what is the spot rate versus what is the rate that we provide. So that's one way any payments company would also make their money, right? But the beauty about us is that our rates are very, very, very close to the spot rate. That is what we pride upon, right? And then the way the company has innovated is we have, in order to sort of like work with, like, the one of the things I mentioned about was the credit, right? That we provide to our customers, right? Um, the margin that we provide. We also help in a lot of different ways our customers, right? So we have now trying to enable embedded payments as part of their own, like, so if they want to send out, say, payrolls, right, to their subsidiaries in different countries, we would help embed it as part of their payroll provider, whoever that is. And we would enable a very seamless flow at the right time. Like, they need to send the payments on every first of the month or every 15th of the month. We would ensure that the payment is made through exactly on
Mm.
that day, right? And so they need consistency. They also need clarity, right? And guarantee. And so we provide all of that. Then we also provide to our much more advanced customers, and especially in the turbulent times like these, hedging products.
Mm.
So these hedging products are very complex, or derivative products are very complex in nature, and they come with a lot of risks. And so you need to be able to understand and manage those risks really well.
Mm-hmm.
And entering into options contracts or forwards contracts and locking in the rates ahead of time in the times of, if they feel in the times of turbulence, um, there is an inherent um, this is sort of like an inherent strategy of risk management and making sure
Mm-hmm.
that you have a cost certainty when you are working on managing your business, right? So we want to take away that part from the businesses, and we can manage it, or we manage it so that they can focus on what they are really good at, is growing their own business, right?
Mm.
And so we guide them about looking, what is the exposure, where at one point do they got margin calls, to ensure that all of those processes are up and running in the background.
Mm-hmm.
So there is a lot of automation that we have to put in place in order for even these things to work. So it is a very interesting space to be in, and the consumers who use these products are super happy about the service and the value they get out of this.
Yeah, that's fascinating. And so, I mean, what you're really talking about is that you are able to monitor global markets at a significant scale and understand day to day what the changing risk factor might be for various positions, for various. I mean, look at what's happening in Israel right now, right? All of a sudden, there are missiles raining down from Iran, and that you can't even fly into or out of Israel through commercial airlines. Well, that's throwing a bit of a supply chain conundrum at the world. So, what is the impact of that? And, we saw this certainly through the first tariffs on China back, well, how many ever years ago that was in the last Trump administration. And then, of course, COVID, when you had this global shakeup of supply chain and of interaction and movement and behavioral patterns. All these things were tremendously disruptive. And to be able to have a system in place that can account for those shifts and those movements in various markets, in various positions, that's a very compelling storyline for a company. And you have to be of a certain size and you have to be global, I think, in order to really provide the robust foundation that is required to even be able to think about offering those products, right?
Absolutely, Eric, right? And as we speak about this, right, we as a company are always want to be at the edge of the innovation. And so what we have
Yeah.
also started to do now is we are building our own payment platform from ground up with a completely new design that can not
Wow.
only support our current needs of our customers, but also provide us opportunities to grow and expand how we can add value to our customers, right? So it's like say one of the things I mentioned was like being part of like the embedded payments
Hmm.
or providing support for virtual currencies.
Hmm.
And especially companies like as you must have seen companies like Circle who provide stablecoin, for example, right? They just grew like 400% in 1 week, right? In terms of valuation. And so stable coin is something that is here to stay. And a lot of our customers now, they are also looking into like, hey, how can Convera help if they want to venture into that space, right? But I think some of these things are a little bit far out in the future. But even today, if you look at the challenges that they face, which are much more real, is you have so many SaaS providers out there and providing very similar products, right? How can how can we differentiate ourselves or distinguish ourselves, right? And so we pride in some of the things that we provide, right? And the way we provide them, we excel in our customer service. And quick onboarding, quick payments, on-time payments, and so on, along with a plethora of products that we provide. I think that sort of like makes us shine out from our competitors.
Yeah, that's really fascinating. And if you don't mind, just to explain to our audience, when you talk about embedded payments, you're talking about embedding the functionality within their own systems, right? Like I guess their payroll systems or something, which there are how many payroll companies are there? There's probably scores of them out there. So you have the ability to embed your functionality inside their payment system, so they run their payroll, it triggers the
Yeah.
functionality that you provide, and that is a seamless process from their perspective, right? That's the key, is they're connecting then to your network through their operational systems. Is that correct?
That is correct, right? And it's not just that, Eric, right? To be honest, like we are embedding or we are integrating with their expense management system for that matter, right? Or
Oh,
GL
really?
they use.
Oh, wow.
Integration partners, right? So they provide packages out and say, hey, look, we have connectors to X, Y, and Z different SaaS providers, right? They want to embed it as part of like the payee management, right? So they have a list of suppliers, so the ERP systems. So
Oh,
the
right.
possibilities are enormous. And that is where we are trying to now venture into as part of our new payment platform is we provide APIs and global APIs and SDKs that they can use us and build on top of it, right? So they could even white label and from the front end side and say, hey, look, powered by Convera. So essentially, we will enable the payments. They don't need to worry about creating manual integrations, moving it daily, creating ETLs, creating working with the data. No, we'll take care of all of that. You do what you do best.
So here's a bit of a curveball question for you. I'm just kind of thinking through, and maybe this is even futuristic, but we interviewed a guy from a company called SafeBooks AI, and what they do is very interesting. They build a bespoke model. They just take something off of Hugging Face and then build a bespoke model for each one of their clients that tracks all their payments and gets a baseline, and then just kind of monitors that over time to notice if something strange happens. Do you have that kind of capability, or are you looking to do that to where you would not only be providing the infrastructure to do the payments, but monitoring it to watch out for fraud, to watch out for abuse, to watch out for someone who may have hacked into a system and is now sending money in a different place? So all of a sudden, the pattern that is normal changes and money is going to a different place that doesn't look good. Do you have the capacity to kind of alert that, to notice that, or do something about that, or is that in the roadmap?
Yeah, so the example that you gave, right, that is a different kind of provider, right? They are not necessarily enabling payments. They are just a
Right,
monitoring tool
right.
that
That's right.
monitors companies, basically all sorts of payments, right? Where we excel is uh, even in the from a compliance and risk point of view, any payments that are outbound. So we don't necessarily have access to all of the payments of any of our customers, right? That is not what we want to do, right? We don't want
Mm-hmm.
uh, that data to be exposed out of our customers' business, right? And so they could be doing domestic payments, they could be paying suppliers, within the same country, right? And so that's not where we excel at. We excel at, like, if they are sending out a payment to any of their suppliers or their beneficiaries, and if one of their bank accounts or their banks are being flagged, or if that supplier or one of the individuals or within that entity of that supplier is being flagged for various reasons, right? That could be politically exposed persons check. That could be checked on a sanction screening, right? There could be the company itself has been flagged by
Right.
one of their subsidiaries through which they are sending, right? So
Mm,
that country has flagged it, right? And so the complexities are much more abound than just looking at, hey, I see a pattern of anomalies happening
I
versus,
see.
hey, look, these are the real regulations, these are the real sanctions that are being updated on a daily basis,
Right.
and we are abiding it so that you do not get into trouble by any
That
of
is
any of the
That's
regulators.
huge. That's really, really important because for any individual organization, just to keep track of those changes would be a real challenge. So you, as a financial services partner, are monitoring all of that for them. So you will see if this country suddenly has sanctions put on it, if that organization suddenly gets flagged by this country, and that's a global challenge. And
Yeah.
it's a right now it's a pretty significant one when you look at the kinds of restrictions that are being placed on this country, on that country, on this industry, that company. All these things are changing very rapidly to the point where, again, an individual organization has no chance of keeping on top of all that stuff. So, as the fintech provider, you are helping them manage that, which is a huge, huge deal for risk management and risk exposure. But, folks, don't touch that. I'll be right back. You're listening to DM Radio. All right, folks, back here on DM Radio talking about moving money all around the globe, doing so efficiently, doing so cost effectively, and doing so within compliance regulations, which are changing all the time. And obviously, in this world that we're living, there are all kinds of sanctions being placed on countries. There are all kinds of new regulations coming out. And it's really hard to track all that stuff. And our friend I'm sorry, Tapan Patek from Convera knows a little bit about that. So, Tapan, I mean, you are in many of these different countries, so I'm sure you have some executives who are tracking these things, some systems to monitor. Because when someone gets flagged as a politically exposed person, for example, that is a system. It's a production system that issues these alerts. You have to be able to ingest that information, process it, apply it to the appropriate workflows. That requires a very dynamic and robust infrastructure, right, to capture the new changes and then apply them in near real time, I'm guessing, right? Can you kind of walk us through how all that stuff works and how that allows you to manage risk and to inform your clients about risk exposures?
No, that's a great question, Eric, right? So the risks not only come in when you send payments, the risks for even for us, right? And we have to abide by the laws and regulations of all of the countries that we currently work with, right?
Right,
And
right.
so the risk, if I look at the value chain, right? And I was sort of like want to highlight like where all we are like even focused when it comes to implementing machine learning or AI or even Gen AI across this entire value chain of how the transaction originates to how eventually the reporting happens. So the first phase of that is essentially like onboarding. So anytime we onboard a new customer, we have to go through a series of KYC process or know your customer or know
Mm-hmm.
your
Right,
business, right?
right.
And so that is there is a lot of screening, and again the screening is dependent on every country and what they require, and certain types of IDs that are required, certain types of information about an entity. So we got to go
Hmm.
back about who the beneficiary or who the owners of those entities are. And when you talk about
Hmm.
businesses, it is very complex, right?
Right.
You could have one beneficiary who's a 30% owner of a company, and then that beneficiary itself, that company itself owns some, a stake in another company, and then, that company wants to transact between another countries,
Right.
right? So, we got to go and have and look at the entire lineage and figure out at what point any of these beneficiaries could be flagged, and first of all identify who they are, whether they have the
Hmm.
right documentation, or collect the right documentation from them, secure it, right, verify it, validate it, and then create that entire chain of KYC for that particular customer, right? It is a mandatory
Hmm.
thing that we have and we collect, right? And
Hmm.
so we are looking at different ways, even just in this particular phase of, okay, can we do a quick video or image analytics as part of this process, so that we can reduce the time of onboarding. Can we do synthetic ID detection? Can we do a quick, while we are doing onboarding, quick name scanning, right? Maybe like a fuzzy match scan, right?
Hmm.
So that way, even, and these are just some of the ways in which we think like we can improvise or onboard any customer much more faster than what traditionally any bank or any other firm would do, right?
Wow.
And, especially when you're dealing with businesses, like as a customer, it's much more easier and faster. But when you're dealing with business, it's much more challenging because you need to know all of this information beforehand.
Well,
Uh,
yeah. Let's just dive in real quick to that because it's very, very interesting. So, identity resolution obviously is a huge, huge deal. And now we're living in a world where the bad guys have AI at their disposal. There are all kinds of different things that you can do. So, just that component alone is critical. Understanding, okay, who is this actual person? Who is this entity? What are their relationships with other entities? To have the ability to survey that environment is really compelling and powerful, especially because, like you say, it can expedite the process of checking the boxes. Okay, we know it's this customer because we have consensus from these various systems, that kind of thing. That in and of itself, that's a huge, huge deal, right?
That is correct. Screening of an entity, it's a very complex process. And keeping up with the sanctions list, or what we call interdictions, it's sort of very hard to do. And so that is where, like, we want to be on top of it. And we also have to report it, by the way, right? Like, so it's not
Right.
just
Right.
identifying, but we also have to report it, make people aware of it, right? So some of our FI customers, FI is financial institutions, right? So you could have credit unions or banks which are much smaller in size, and they do not have a foreign exchange capability, but their customers, they want to transact, right? So they would use companies like us to sort of, like, again, like sort of like white labeling it, and then enable the payments, right? And so for them, we don't necessarily have information about their customers. You see?
Hmm.
And so we would have information about that particular customer as a bank, but we don't know who their customers are, who are initiating the payments, or who they are sending it to as a payee,
Hmm.
right? And so the scans are not just for the originator or remitter, but also for the payee or the beneficiary, right? And so it's sort of very hard because we have very limited information about a payee, right? And so when somebody initiates a transaction, right, there are different types of checks that are happening. Some of those are real-time checks, like, if a country bars anybody from sending funds more than X amount, right, in that currency, we have to stop it, right? So or if the customer is brand new and wants to send like more than like $10 million, then they have to go through further checks, right? So then that transaction is flagged. So there are lots of things that happens real time, and then there are things that happens in the back end on a batch basis. And so like the whole process of transaction monitoring, payment screening happens, and that is where, like, the use of this machine learning models, especially for like flagging, because you cannot just determine or depend on rules and manually that are inputted or coded out to identify these things, right? So you have to enable AI-based model to identify patterns of suspicious behavior, right?
Mm.
To help certain types of profiling of these transactions based on either the customer behavior or the payee or the the currencies, uh,
Right.
right? And so these are all sort of like part of our transactions monitoring, piece of the face, right? And then apart once that is done, like we get lots of alerts. And based on those alerts, there are cases that are created in our system, right? For somebody to manually go in and validate that. Typically, what happens is if some of these systems are using fuzzy logic, right, or fuzzy matching logic, we get a lot of false positives, right?
Mm-hmm.
So the challenge for us is from an operational point, we want to reduce our cost down. Then what can we do to have a much more consistent and reliable uh, payment screening outcome, right? So we have built models that supports that, right? Where we have been able to have 92% accuracy in the outcomes of that. And we have to ensure that our PII is safe, right? So even while we are training the models, we have to ensure that we do not provide any PII information, even accidentally. So we
Yeah.
sort of like factor all of those things in as we build our models out, right? Or even like you get like plethora of like say hundreds of alerts. Which ones do you prioritize over the other one,
Right.
right? So alert prioritization is another interesting thing, that we deal with. And then even while the payment is being routed, what is the best network topology to consume to route the payment across, right?
Yeah.
So I think that is an interesting area where we excel, or where we are also trying to improve upon as well. And then overall, when we create all of these cases, we want to do case management, right? We want to, whenever we, so one of our customers, they contact us, they can contact us through different channels. For every customer contact that happens, we create a case associated with that. But then we also have to automatically, like we have built a model where we can classify those cases automatically as well, through
Mm-hmm.
somebody sends an email out, right? And they would provide minimal information or through a support ticket, right?
Right.
So we have built models to automatically classify those cases. And so there are different or even like as we are working through our contact centers and they are going through the resolution, so we have built or we are planning to build a mechanism to help them suggest or recommend possible resolution mechanisms for that.
That's crazy. Let's go to break real quick. We'll be right back. You're listening to DM Radio. All right, folks, back here on a fascinating DM radio with Tapan Patek of Convera. We're talking about moving money all around the world efficiently, cost efficiently, and within compliance and regulations around the world, which are changing constantly. And Tapan, in the break there, you just talked about how the three pillars of your CTO's vision are productivity, protection, and value creation. So let's kind of close on that. And I love this holistic approach. And it really kind of speaks to what we started with, which is this holistic treasury service on a global scale, where you're in all these markets all around the world. And so you have visibility into what's happening all around the world. And that'll really kind of fuels your own insights because you can use that data to manage your environment and to deliver productivity, protection, and value creation. So go ahead.
Thank you, Eric. Yes, this has been our CTO's vision as well. And, he has wonderfully categorized it across these three core pillars for us, right? So that also becomes like a guiding sort of like light for us as to, okay, if we were to come up with any sort of initiative of improving, then how should we think about it? Under which pillar would it fall, and how is it going to help our customers, right? And so, with that in mind, I think if I were to dive deep across each of these pillars, right, say, for example, productivity and improving efficiency, right? Now, that can be both for the customers we serve, as well as for us in-house or internally as well, right? So like whether improving developer productivity through the use of Gen AI tools like copilots, uh,
Mm-hmm.
or improving our product management productivity through giving it or creating knowledge bases. This is one of the things that we have already implemented today to enable our new payment platform that we are building, writing better user stories, writing in-depth or providing in-depth knowledge about some of these FX concepts that are really hard, or derivative and hedging concepts that are really hard to grasp, so that we can enable better products, or doing product analytics on top of the product platform that we are building. Think about supporting our operations, our customer contacts, both internally and externally, helping run our business much more smoothly and efficiently, right?
Mm-hmm.
And so that could sort of like go into everything from improving our overall workflow to looking at ways to reduce the complexities and improving or reducing the time for the payments to go through, right?
Mm-hmm.
In terms of protection, this is a very interesting area because this is a key cornerstone that we we sort of like look into, and we have to also sort of like abide by. And so this is where I do believe tools in the Gen AI space can help immensely, especially to identify fraudulent transactions, mitigate fraud, manage the overall risks, manage our, like, say, for example, our funds across different accounts. We want to ensure that we have enough at the end of the day to either fund out the payments, or to ensure that we do not have to either go into a credit mode ourselves, right?
Right.
Buy
Right.
currencies which typically end up getting more expensive in nature, right? Especially when you talk about regulations, they keep on changing, right? So we're dealing with, say, Australian regulations. They have different types depending on the type of product we sell, whether you are doing, money markets, or whether you are doing like an automated or a batch transactions, right? um, how do we ensure that we are up to date to them, and as and when the regulations change, we also adopt or are able to adopt it quickly within ourselves, right?
Mm-hmm.
There are certain things that need to be flagged because now they have suddenly highlighted it, or hey, they've increased the barrier for things that they want to be highlighted, right? So we have to be on top of that. And then finally, from a value creation or from a revenue generation point of view, uh, you know, product innovation is sort of like a major thing here. How can you enable, like, say, different sort of like chatbots for our customers so that they could get to the answers like, hey, where is my payment right now? Like providing them transparency about where
Right.
exactly in the supply in the value chain the payment is stuck. And typically, once the payment or is funded to us or is settled, what we call the settlement process is done, the funds move very quickly from our side. It's typically their banks who
Mm.
takes time, whether, and depending on the type, whether it's a wire that they enable, or whether it's a direct debit, so it's a push or a pull type of payment. The funds take time, typically in the local currencies, right?
Mm-hmm.
And so, how can we enable, like as I mentioned, like AI agents or chatbots to provide transparency into the payments for our customers, or provide insights into some of the nuances of the way the global trade happens, so
Yeah.
that they can make wise decisions on their side as well, right? So I think there are lots of opportunities for us and other players in this space to grow, to have maximum impact for
Yeah.
themselves and for the customers.
Yeah, and I'm gonna close on this analogy because this is really just fascinating. And you talk about transparency and where the money is in a process. I'm gonna make the analogy to Uber. and Uber drivers and how that disrupted the taxi service. In the taxi service, you'd order a taxi, you had no idea where it was. I mean, the dispatch might tell you, oh, you should be there in about 5 minutes. Maybe it's 10, maybe it's 20. You really don't know. But with Uber, because their system was designed to pull IoT data from the phones in all these cars, so you can see where they are relative to you. So you sit there and you watch as okay, it's coming around the corner. Now it's coming down the street toward me. That kind of transparency builds trust. And to your point, Tapan, it helps the client better manage their own resources, so they can say, okay, we're not going to get that money until tomorrow, so let's revise our own situation here to accommodate for that. And the bottom line is, the more transparency you get, the better decisions that you can make about where things are, what decisions you can take, what purchases you can make, what liquidity you have, what your risk
Yeah.
exposure should be. All these factors come into play, and it is so powerful and so compelling to have that transparency, and of course to have the trust to know about the durability of the institution, to know that yes, we are going to get the money. It's just a question of when, and now we even know when, and we even know why. So, I mean, that's how you can start building some really compelling products. Well, folks, look this gentleman up online, Tapan Parekh of Convera. That's Convera. Smart Money Moves. This is absolutely fascinating. We'll talk to you next time, folks. You've been listening to DM Radio.